Better System Trader, episode 52.
Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Welcome to the Better System Trader podcast. This is episode 52, and I'm your host, Andrew Swanscott. Well, what a couple of interesting days we've had in the markets with the reaction to the Brexit decision. I hope you didn't suffer too much pain from those volatile market moves and that your trading accounts have lived to trade another day. The guest on this episode has been on the show before. He joined us to discuss breakout trading strategies back in episode 43. And it was a very popular episode, so if you haven't heard it yet, you should go back and take a listen to it. In that chat, we discussed the steps to building breakout trading strategies, and we even released a breakout strategy toolkit, which included an ebook and cheat sheets and easy language code for 2 breakout trading strategies. So it was very popular and highly practical. I recommend you go and take a look at that. Now, in this episode, our guest, Tomas Nesnidal, will be sharing a different trading approach with us, and it's something that he likes to call an unfair advantage. He's going to explain to us exactly what it is and why he calls it an unfair advantage. So I'm not going to tell you what it is just yet, but it is something that a lot of traders have probably heard about before, but perhaps they're not aware of how to use it properly or even the impact it can actually have on trading results by applying this technique. So you're probably all wondering what this technique is, so let's jump straight into the chat with Tomas. I hope you enjoy it. Hi Thomas, welcome back to the show. It's good to have you on here again.
Hi Andrew, thank you very much having me here again. My pleasure.
Now, you've obviously been on the show before. We had a really good episode a little while back on breakout trading strategies, which was very popular because you gave away some excellent information. So you gave a little bit of background about yourself there, but how about just a little bit again for people who maybe aren't familiar with that episode?
Yeah, so just very briefly, my name is Tomas Nesnidal. I have been a trader for over a decade. I've been trading automatic trading strategies for last 6 or 7 years. And my specialization is breakout strategies. So my main focus is on automated breakout strategies. And I've chosen this automated trading style because I'm a frequent traveler and we just wanted to travel with my wife. So this is how I got into automated trading, and also it became my passion. So I'm really very passionate about this kind of trading and automated trading and anything related to that.
Yeah, okay, thanks. I'm really excited for our chat today because you're going to introduce something that I think is quite unique, something that you call an unfair advantage. So I guess as traders, we're always trying to find something that will give us just, a little bit more of an edge in the market, something that can improve our trading results. And even just the smallest of things can make a huge difference over time. So I'm really excited to be talking about this with you and sharing it with others. So before you actually share what it is, can you tell us why you think, or why do you call this an unfair advantage?
That's a good question. I honestly think that what I'm going to reveal you today, it really kind of is an unfair advantage. It is something that I'm very surprised how few traders know about, and even fewer traders actually use it. It's a technique, it's kind of simple technique, kind of simple thing, but it's very, very powerful. And probably the reason why very, very few people know about it is just that you don't actually find out many information on this unfair advantage, on this technique. There are some information on the internet, but these informations are very general. And if you want to make this unfair advantage work for you very well and significantly improve your trading, then you need to do your own research and your own creative experimenting. And that's obviously something that nobody wants to share on the internet. So when you go to the internet, you find out very, very few information. That's also why I call it unfair advantage, because unless it becomes totally popular, it will remain just for very small amount of people, a small amount of traders. And that's why I believe it still can remain to be a little bit of unfair advantage.
Okay, so what are some of the problems that you think traders experience that can perhaps be alleviated or resolved by knowing about this unfair advantage?
To be honest, I'm quite surprised how effective this unfair advantage is and how much it can help in many areas of trading. So if I will take it from extreme, you can, in certain cases, you can literally take some failing system, some broken system, which is not working anymore, and you can literally turn it into a profitable, workable trading system again. This is how powerful this unfair advantage can be. Of course, this is an extreme. This is such a very, very extreme case, but it is something that happens regularly and that you can really achieve with this technique. But if I will look at a more usual way how you can improve your existing trading strategies, then you can practically improve whatever you need to improve. It can be the overall performance. It can be drawdowns. You can significantly reduce your drawdowns, sometimes by up to 50% or even a little bit more. You can improve some metrics. Let's say, for example, you're not happy with your average trade because your average trade is too small and slippage and commission take too big part of that. So you need a higher average trade. So you can really improve this metric or any other metric you just need to focus on. I personally like improving the overall equity, and I like improving the ratio between net profit and maximum drawdown. That's my usual goal with this technique.
Okay, and outside of trying to improve the metrics, are there any other types of benefits by applying this particular technique?
I would say that probably the biggest benefit is that you will achieve some reasonable overall improvement, because from a certain point in your trading, you don't have much possibilities how to improve your existing strategy without having the danger of overfitting, over-optimization, or without having the strategy too complex. So you really need something simple and powerful that cannot destroy your existing strategy, but at the same time, it can significantly bring some improvement, something new, some novelty. So this is probably one of the things that it's a huge benefit, that it's simple, it's a universal, kind of universal. I'll talk about that later on. You can apply it almost immediately. It's also something that very few traders know about. And it's also something that doesn't have this kind of risk of having your strategy too complex or over-optimized. It's quite robust and quite reliable.
Okay, so that sounds fantastic, and I'm sure everyone's waiting to hear what this is. It's probably killing them, but so now it's time to let the cat out of the bag. What is this unfair advantage that you're talking about here?
Okay, so this is something that I believe that many traders already did hear about in the past, but somehow they just ignored it or they didn't know how to use it properly. And this unfair advantage, or as I call it, unfair advantage, if you will, it's market internals. This is the great technique, one of the best techniques that I've ever discovered to improve an existing trading system. And this secret, this unfair advantage is called market internals.
Okay, so can you explain a little bit about what market internals actually is?
Okay, so market internals, I like describing it as a overall picture or a broad view of what is really going on market as a whole. So from my point of view, it's like getting the bigger picture. It's an information provided by stock exchange, and this information gives you a bigger picture, and this bigger picture allows you to make wiser, better, and more intelligent decisions just by the fact that you see what's really going on the stock exchange market as a whole.
Okay, so we'll come back to this bigger picture because I'd like to get into some more detail and some specifics about what it can actually tell us about the market. But just before we do that, can you tell us how did you actually come about discovering market internals and the power of it?
It was kind of a longer journey because many years ago I used to be a discretionary day trader. And discretionary day trading, it's quite difficult. I found it more difficult than automated trading, especially from a psychological perspective. And I was continuously trying to find out something that could be really helpful, that could give me some extra edge and could somehow make the emotional part easier by having clearer and better decisions, just to make some better and more powerful decision process. And at that time, I've discovered some basics of market internals, and I applied them to discretionary day trading. And it was kind of all right. It was like you could live without it probably, but if you used it, you did get some extra edge. That edge wasn't that huge, but it helped. In certain way, it helped. So I was experimenting with that, and I did during certain period. I used to use it in my discretionary day trading, and then when I moved to automatic trading, system trading, I somehow completely forgot it. I just forgotten completely that there was something like market internals world. And one day when I was evaluating my recent performance and going through all the strategies, I found out that some strategies had a little bit of struggle. So I was really trying to figure out how to improve them. And then all of a sudden this idea of market internals pop up on my mind. And I was like, okay, let's try what can we achieve with market internals in system trading, in automated trading. So I started really digging deep into this topic and I tried to find out any information on the internet that could help me figure out some reasonable market internals conditions that could be implemented into the code. And actually, I was not successful with that. There were very, very little information shared. Some kind of information that you can find out on the internet are very contradictory what you will find out by your own research. So, for example, you will find out some general guidance how to use market internals called TICI. And if you will try to test the right opposite of this recommended way to apply TICI into your trading, you will realize that doing just right opposite will make you better trader and will bring you more improvements. So this kind of information that you can find out publicly on the internet are very misleading, very shallow, and you cannot really get anything out of that. So I started really thinking, how can I make this work? What can I do for that? And then I decided to go really deep into this topic. And I spent about 6 months every single day doing research, being creative, meditating, because I already noticed in my first podcast that I like doing meditations that can help me be more creative and come up with a more creative solution. So I was really going through this process for 6 months. And at the end of this process, I came up with 32 market internals conditions. And these 32 different market internals conditions, they are something like superfilters. They are like general filters that can really help you bring this general big picture into your trading and improve your strategies. And then I started applying these conditions to my existing trading systems. And of course, not all of the systems have been improved by market internals, but in some cases, I really got some amazing results, and this is how I started implementing market internals into my own trading. And of course, now I'm just about to launch, or I'm in the final phase of preparing launch of my own hedge fund or CTA program, and market internals are again going to be part of that because I found it to be an amazing and tremendous tool.
Well, it sounds interesting. I'm really excited to hear more about the application of market internals. But before we get to that, you mentioned a bigger picture before. Can you give us a bit more detail about the types of things that market internals can actually tell us about the market?
Yeah, I think that this is the right point to explain this further. So in general, each stock exchange can provide you with the general summary of information which are based on the behavior of all the stocks being traded on this stock exchange at each moment. So let's say you take information from New York Stock Exchange, and now you want to see the bigger picture. You want to know what's really going on the New York Stock Exchange as a whole. And then you can get market internals information, which can tell you things like how many shares at each moment, each second, are going up and how many shares are going down. So this is very basic information, but it already gives you some extra information because you really have some broader perspective from the overall stock exchange market right now. And of course, this is just one type of market internals, and you have more types of market internals. So you have market internals information based on price, volume, or volatility. So you can really get information about overall volatility on the stock exchange market as a whole. Or you can get information about price movement as a whole and about volume. For example, in case of volume, you can know instantly, immediately in each moment if the overall exchange trades more volume on the upside or on the downside, which I think it's quite good information because once you're taking a signal, a trading signal, let's say you're going to buy a stock, you really can do much better if you know that this signal, this long signal, buying signal, is confirmed by the overall behavior of the stock exchange as a whole. So I think that in general, it's not a good idea to go long when the volume pressure on the overall exchange, stock exchange, is heavily down. And this is how can really market internals help you to see the bigger picture and consider in your trading decisions.
Okay, so you're kind of starting to touch on this now. How do you actually use that type of market internals data in a trading system?
Technically, it's very easy because it's like a separate data feed. Stock exchanges provide unique, special, standalone data feed. And the way you can, for example, get a data feed of, let's say, S&P 500 index, you can also get a data feed in form or a form of data feed that will provide you with market internals information. So stock exchanges, they usually provide with several types of data feeds that cover market internals. And again, this is usually based on price, volume, or volatility. The most common data feeds are called TIC or TICI, U-Vol, D-Vol, or VIX. I think that most people are very familiar with VIX, but not so many people are familiar, for example, with U-Vol or D-Vol, which is kind of information giving you the perspective on price and volume on the overall market. And just by just by comparing the U-vol pressure, that means up volume pressure, and D-vol pressure, that means down volume pressure on the stock market as a whole, you can already get some very, very good information. And then you can take it from here and start being really creative. So, for example, if you know that you can get an information from your stock exchange that can tell you the overall price and volume pressure on the upside and on the downside, then you can, for example, start looking for certain ratios, and certain ratios can reveal you that it can be significantly helpful to your existing trading systems. And this is basically how you take this information, how you process it, and how you start using it creatively to improve your existing trading systems.
Okay, now just a little bit before, you mentioned the term superfilter in reference to using market internals in your trading decisions. Can you explain what you mean by a superfilter? What is that?
That's a very good question. Superfilter, I would say that it's a filter that you just add to an existing strategy, and superfilter it is because it helps you filtering your trades based on the big picture. So again, let's come to the example that I mentioned just several minutes ago, that you have a trading system, and this trading system gives you a long signal. If you add a superfilter, that means that you can always have some other additional information that can either confirm you or deny you the overall mood, overall buying or selling pressure on the stock exchange market as a whole, and help you effectively filter your trades. So again, you would probably not want to take on a long position when you know that the overall mood or pressure on the stock exchange as a whole is towards downside, towards selling. And in the same manner, you can use this information for exits as well. So let's say that you're holding on a long position, and now there is a significant change in the overall behavior of the market. And that's again something that you can realize by reading market internals data feed and interpreting it the right way. And as soon as you see that there is a significant change in the overall behavior of the stock exchange as a whole, it really doesn't make sense to stay in a long position, because the mood can be very different now. There can be a lot of selling pressure, so you can immediately act accordingly. That means you can exit your position prematurely, or you can tighten your stop loss, move your stop loss to break even, or take any kind of action that can really help you protect this existing long position and react on the general whole big picture coming from the stock market as a whole.
Okay, that's a lot of applications that you've kind of mentioned in our chat, and very early on you mentioned some of the benefits in drawdown reduction and increasing average trade and that type of thing. So, what type of results have you actually seen by using these market internals techniques?
First, I would like to say that it's not just me who's receiving great results. It's also a lot of people in Czech Republic, where I originally come from, that I taught and showed this technique. So many traders that get familiar with this technique with my help, they really getting great results. And top results are probably that one that significantly improved my trading strategies with very little time involved and with very little tweaking of an existing strategy. Some of the top results are turning failing strategies into working ones, reducing my drawdown up to 50%, improving my net profit drawdown ratio, sometimes up to 100%,
Wow.
increasing profit factor, increasing average trade. So you can really get any kind of result. It just depends. It's quite individual. It depends on the underlying strategy. You usually apply market internals on existing strategies. And it depends. Sometimes there's no improvement at all, but sometimes you can get a huge improvement. And I think that I can even encourage your listeners to get some case studies. Can I share them?
Yeah, sure. Yep.
We prepared some case studies on a standalone domain, which is tradingmarketinternals.com. So if you will go to tradingmarketinternals.com website, you can download some real case studies from my own research and work. And I also have a special case study for better system traders. So just watch these case studies, and I think that you will get some idea.
Yep. Okay. Excellent. Thanks for sharing that. Those case studies are really interesting. It's quite interesting to see the difference that market internals can really make when you know how to apply it correctly. Now you mentioned a couple of different types of market internals. VIX, which I'm sure everyone's heard. TICI is also quite popular. UVOL, DVOL, and a couple others. What's your favorite market internals condition, and why is that the case?
It really depends on the trading system. Each trading system really works with different kind of conditions. But in general, I found out that some quite simple and basic market internals conditions work really very well. Because my 32 market internals conditions, they consist of some very advanced stuff. For example, I took the concept of statistical arbitrage and applied it to market internals to get some very fancy way to use it. And surprisingly, these complex and quite advanced concepts are not the best that you can find out, and the simpler concepts can quite usually bring up some very good effects. So I like basically all of them. I like TIC, I like UVOL, DVOL, I like VIX, then I like ratios, I like using of Bollinger Bands. I don't have any special preference. It always depends on trading system, and for each trading system there can be something more suitable than for the other one.
Okay. Now we've been talking all about the benefits of this type of technique, but are there any drawbacks or perhaps shortfalls of using market internals?
I think there is one quite important one, and that's the fact that you can apply market internals to index trading or stock trading only. So you can use it with stocks. You can use it with, especially with indexes, and especially if you trade future indexes like S&P or E-mini S&P, E-mini Russell, or whatever. That works just beautifully with market internals. You can use it on some ETFs as well, but you cannot use it on other future markets like grains or energies or metals, and you definitely cannot use it on Forex. So that's probably the biggest disadvantage. It's not completely universal. You have a certain limitation to the markets that you can use with market internals.
Okay. So for someone who wanted to learn a bit more or even to get started with market internals, what approach would you recommend they take?
First of all, I would encourage everybody to download that case studies from tradingmarketinternals.com website that I already mentioned, because it really gives you some perspective and you can see if this tool is or is not for you. And then I would say that the best way is just get the market internals data into your platform. For example, I'm using TradeStation. In TradeStation, it's very easy to obtain any market internals data. It's very cheap. I pay about $2 per month. and just start getting familiar with this kind of data feed and just see what it is, what it looks like, how it behaves. And then I think that the crucial part is start experimenting, being creative. I already mentioned this in my Breakout Strategies podcast, that it's very important to be creative and to come up with new ideas, with some novelties, with some tips and tricks, something new that you can bring to the existing world of trading. And it's the same with market internals. So I think that just if you start observing and if you start with a simple observation of market internals data, you will get a kind of feeling for that. You will get familiar with that and some ideas will start popping up. And just take any idea, whatever crazy it looks, and try to code it and test it and see if it can improve your existing trading systems with such a market internals conditions. Don't limit yourself. I really realize that sometimes ideas that sound completely crazy and you would probably forgive them immediately can in fact bring some very interesting results. So be creative, experiment, think about your own market internals conditions, start with something basic, simple. You can just start with simple ratios, Bollinger Bands applications, moving average crossovers applied on market internals, and it will definitely give you that necessary kick that will help you to accelerate this theme, this topic, and bring up some very interesting and powerful solution how to improve your existing trading systems significantly.
And I understand as well that the special blog post that you have for Better System Trader listeners also has some code in it, right? So people can actually do a test in TradeStation and they can see that the type of impact it has on a very simple strategy. So thank you very much for sharing that. I recommend people go and take a look at that one. It's very informative. Now, one final question before we start wrapping up for today. What do you think is the most important aspect of the market internals approach?
I think it's, again, and you probably will not be surprised hearing that from me again, and that's the creativity. Yeah. It really, you need to think about any possible things that you can do with market internals. You can have billion of ideas, and that's great, because sooner or later there will be some idea that will really get you wonderful, amazing results. So don't be afraid of testing and experimenting with everything. Just get familiar with market internals. It's very simple. It's nothing complicated. Actually, it's so simple that you will be blown away how simple it is. Just you will get a data feed. That's it, basically. That's it. And then start being creative, because this is the way how you will reveal some great possible applications that will tremendously help to your trading strategies, get them better.
Yeah. Okay. All right. Thanks, Thomas.
Better system trader, right?
Yeah, that's right. That's what we're here for. Thank you. Okay. Now on to the closing question. So obviously you've been on the podcast before, so you know that we finish up with some quick closing questions. I usually ask about, in a general kind of trading concept, but we're going to put a different spin on it today, and we're going to ask the questions in the context of market internals. So what's the biggest lesson you've learned through using market internals?
I've learned that this technique really works. It's a great technique, powerful technique. You also, at the same time, need to manage your expectations, because some trading strategies cannot simply be improved by market internals. I have no answer why, but they cannot. But a lot of can be. And the biggest lessons, again, is just think about any possible applications, because with some even simple and basic ideas, you can really get great results if you will be just a little bit creative.
Okay. And what's the hardest part of using market internals?
Wow, is there some hardest part? I don't really think there is any hardest part.
Okay. What do you think is the most important ingredient to becoming a successful market internals trader?
The most important ingredient is start exploring it and start using it. Just start right now, get the data feed and just get to this market internals world, because once you get into it and you will start digging deeper and deeper, then you can come up with something reasonable. And it's always the first step that needs to be done towards building something bigger and greater.
Okay. I'm not actually sure there's an answer to this one, but what's your favorite market internals trading book?
There's not any.
Okay. I thought that might be the case.
There simply doesn't exist any reasonable market internals book. There's nothing on the market that you could use.
Okay. And the final question, is there anything else that you'd like to cover before we wrap up?
Again, I just would like to encourage you, go for market internals, try it, and spend some time with that. This is probably the most important part, because I know that in general, a lot of traders, they are familiar with concept of market internals. They know that something like that exists, but they are kind of shallow when they start thinking about applying it. What I mean is that they just look at the internet, pick up some quick advice number 1, quick advice number 2, they'll test it, there's no result, they abandon the market internals concept at all, they'll forget it, and that's it. This is an unfair advantage for a reason. The reason is that very few traders really can dedicate themselves to dig deeper, come up with some ideas, try to squeeze out something out of this concept, and you somehow need to rediscover it. You need to put work, effort, and try to get something out of that. Don't expect that you will find out some immediate quick solution on free websites on the internet, because there simply are not any. But once you will start, I'm pretty sure you will really get immersed into this wonderful world of market internals, and that's the moment when you will start coming up with something reasonable. And just step by step, you will be able to improve your trading strategies and get a completely new perspective on index, stock, or ETFs trading, and really become much more advanced trader by applying this unique technique and this unfair advantage.
I know when I first looked at some market internals charts like the TICI chart and the UVOL, I thought, how is it possible that you can create strategies out of this? But you've actually showed me some things, and I know I've seen the evidence. So for anyone out there who's trying to find an edge, it's definitely worth looking into, because it can be used in a lot of different ways, and it's definitely a technique worth investigating. So I highly encourage everyone to look into that. Now, thanks so much for joining us today, Tomas, and explaining this unfair advantage. I'm sure that a lot of people are going to find some value in it. Now, you've mentioned the tradingmarketinternals.com website, but for people who wanted to get in touch with you further, how can they do that?
They can definitely find me out on my trading blog, which is systemsontheroad.com, systemsontheroad.com.
Yep. Okay, well, I'll have a link to those two websites in the show notes page so that people can find those easily. So, yeah, thanks again for your time today and sharing this valuable information with us, and I wish you all the best.
Andrew, thank you very much for having me here. As usually, it's my big pleasure, and I hope that this information will in any way help to other traders. So please, good trading and good creativity to all of you. Thank you.
Thank you. Bye-bye. So how did you enjoy that? Interesting, right? I've been working with market internals quite a bit in the last few months myself, and have been getting some really interesting results. So I highly recommend you look into it further. If you have any questions on market internals, please post them in the show notes page at bettersystemtrader.com/52. Thomas is more than happy to answer any questions you may have there. Now, as Tom mentioned, if you head over to the website tradingmarketinternals.com, you can download a free report that has 3 case studies which really demonstrate the power of market internals. It's very interesting. It also has backtest reports, so you can see the impact it really has on trading strategies. Also, the blog post that Thomas mentioned in our chat today will be out in a few days' time. We're just finalising some of the content on it right now. I think you'll find it really interesting because it's a case study again, where we apply one of the market internals techniques that we discussed on the show today, and we apply it to an extremely simple breakout strategy. Actually, the strategy is so simple, it's literally only a few lines of code, and we'll actually make the code available in easy language so that you can download it yourself and test it and try that market internals condition on some of your own trading strategies as well. Anyway, the case study does a comparison of before market internals and after market internals, and the results are quite interesting, so make sure you check that out. We're planning to release that one on the website on Thursday, so I recommend you head over to the website then and check that out. I'll also send out an email reminder letting you know that it's been released, so if you're not on the email list, make sure you sign up so that you don't miss my reminder. Anyway, that's it for this episode. I hope you enjoyed the chat with Thomas and got some more trading ideas for you to test. I've got a great guest lined up for the next episode, which I'm sure you'll enjoy, so I'll catch you at that one in 2 weeks' time. Thanks for listening to Better System Trader.
Thanks for listening to the Better System Trader podcast. The next step is to head over to bettersystemtrader.com for more expert tips, practical advice, and exclusive content. Catch us next time for even more great ways to improve your trading here on Better System Trader.